Sarah Foster's with me, analyst over at bankrate.com. As we continue to watch some of the breaking news, you're with me, and I love this kind of day because you see that the Fed's not convinced that inflation's coming down. It's very evident, right? Tell me some of your thoughts.
I think the minutes is a really important release to keep an eye on. It's obviously adding more color to what we got from Fed Chair Jerome Powell, the post-meeting statement. The biggest revelation from the post-meeting statement was the Fed acknowledging that it's going to take a little bit longer for them to get the confidence that inflation is falling. I do think that these minutes don't necessarily acknowledge the recent improvement we saw in inflation. Obviously in April it slowed for the first time this year, but the Fed is nowhere close to waving that mission accomplished banner.
Yeah, and so, I mean, data pointing to inflation being more persistent, sticky. What happened to transient? Remember when they said inflation was transient? That was so long ago, nobody can remember that. But the point of the story is that, do you think a hike might be likely? People have been talking about a hike since January. Someone like Ben Emmons, who's on our network all the time, he was the first one saying hike. But I've heard a few people still say hike. They even say it as a maybe.
Well, Fed officials would always say nothing is never on the table, and that's actually quote unquote what Chicago Fed President Austin Goolsbee said. Powell was asked about this at the press conference, though. He mentioned that the next move is most likely to be a cut, or at least the next move is not likely to be a hike. But of course, we'll have to see what happens with the data as it comes in.
Yeah, and they're just not seeing the growth. They don't see inflation coming down. They wanted to sustainably move towards that 2% target, which they had pushed out, I think, into 2026. But that's part of it as well. What are some of the big picture of the things that you're watching and how it relates at bankrate.com? What are some of the elements that you watch really closely these days, this week?
Yeah, well, on the Fed, I think it's really important to also remember that there is this change in the message where they're not necessarily just paying attention to inflation, but they're also waiting for the labor market. They're keeping an eye on the labor market, and if we were to see a slowdown there too, that could be something that could change their next policy move. So that's really important data that we're looking at. We just released a survey that kind of looked at how Americans are feeling about their own personal financial situations coming out of all of this inflation. We might be seeing that they're defining financial success a little bit differently in result of just how much more expensive it's become to afford everyday essentials.
Yeah, and it's just there are various people among the Federal Open Market Committee members who didn't want to take a hike off the table that we're talking about, that various Fed officials said they were willing to hike interest rates if needed. In the meantime, Americans are still paying more for so much. I know we're coming down. And you're seeing, for example, Target came out and they said people are spending less on groceries, on home goods, even on furniture and apparel and things like that. What's the expectation going forward? And the sentiment, how do people feel? I think that's it as well.
I think sentiment is a key question here because we do see this strong data continue to point to the labor market, unemployment being at this historic low, inflation slowing. But many questions I get in just my role as a consumer advocate at Bankrate, they question, consumers do, about whether inflation really is improving because they don't really see it across the board. And so what I think is important to keep an eye on, at least from the consumer perspective, is kind of how they're feeling about inflation since pre-pandemic. When we zoom out to that February 2020 level, we see that prices are up about 20.8% since then. Only 5% of the 380 items that the Bureau of Labor Statistics tracks are cheaper today than before the pandemic, and consumers really remember that.
Yeah, without a doubt. Also, you're seeing everybody carrying more credit card debt, and I don't think credit card debt is the issue. Because when I asked this question, I know that, we had credit card debt in 2019 too, but the fact that it has been increasing, I think it was, above $6,000, and then the delinquencies were sort of creeping up. It just doesn't bode well. It sort of makes me a little nervous when I hear about that.
There is a lot of very eye-opening things about the latest credit card debt data. First, you can see that it's really hard to break out of the cycle of debt because you're dealing with inflation. Consumers are seeing expensive essentials that they can't cut out of their budget. And a lot of times we've even seen that workers who've received raises in Bankrate surveys, about more than half of them have said that their pay hasn't kept up with inflation. So you have the, what's influencing you to go into debt, and then you have the credit card interest rates, which are at record highs, levels we've never seen in data that we've been tracking at Bankrate. And so I think something important to keep an eye on is just looking at how many Americans are maxing out their credit or at least coming close to it.
Yeah, and as far as the home sales, we're going to be talking about this later in the show, but for the second month in a row, home sales are coming down. You have mortgage rates still above 7%. I just heard the latest numbers a moment ago. There's just no relief. And then what do? Take out another credit card? I mean, what? People, if they have to live or they have to maybe change their lifestyle, I don't know. I mean, what do you tell folks when they try to explain to you, my credit card is at 25%, I can't get ahead, right?
Yeah.
And they do buy now, pay later, and it adds up.
What I do try to stress to Americans is that no step that they can take is too small. Even if you are saving just a few dollars a month for your emergency fund, rates at the high yield savings accounts that we've been tracking are at 5%, which, pre-pandemic, that was probably a market-like return, but this time you have FDIC insured banks providing you that money.
Yeah.
It's also important to just really go into this period with a budget. Be sure that you know how much money you can afford to spend within every line item.
I think it's also funny how everybody just does this revenge travel, their pent-up demand for this and that. I don't know. I mean, people just, they sometimes just say, whatever, the debt, more debt, what's the difference?
Yeah.
I mean, it probably just really gets you at some point. Sarah, it's great to see you. Glad you were on in this breaking news environment. Right now, the markets have taken another leg lower. Now the Dow is down about 177 points, and the S&P's at 5304. So Sarah Foster, Bankrate.com, thank you.